we go. Alright, good afternoon everyone. Today is Monday, May 7th, 2012. We will go through our trades from the morning session and everything that worked, everything that didn't work. We'll go through it all. Alright, so let's just start out with the results. Okay. Well, first I want to say if you have not taken the free trial yet, go to www.cfrn.net. That's CF, like financial, rn.net/apply. And fill out the little form there. No credit card required. When you take a free trial, you get all of the indicators that you see right here, right now, and then some. You get a whole bunch more than this, actually. You also get access to the live trading room for 2 hours for 5 business days, 2 hours a day for 5 business days, and you get access to Dwayne and I. You get access to the website, not the members area, but the website. You get everything that a partner would get except access to the members area and the weekly partners meeting. Okay, those are special for partners. Alright, so moving forward. The markets were a little bit choppy this morning. I don't know what just happened, but I got to load everything back up again. The markets were a little bit choppy this morning, and we'll just go through all the markets here as soon as I can bring them all back up for you. Here we go. There's another one. And all the DOMs as well. We ended up down on gold. We were down about 2 trades on gold. We were down 4 ticks on the YM, and we were up 3 ticks on the NQ. We took an ES trade this morning right here. Was this the one that we took? Yeah. We took this ES trade this morning. I think this is the one, isn't it? And we got a break even on the trade. Yeah, this was it right here. We ended up getting a break even on that. We got out break even. I'll show you the actual setup. Okay, I'll blow up the 10,000 contract chart, and we'll just start with the ES. Price this morning moved up. These horizontal lines I drew in here this morning once we had established this range. Price had this big move up without any pullbacks. This was the first pullback down to the BBC right here. We actually bought right there at 1363. We had bullish divergence right here. It came back, tested the BBC. We bought the BBC at 1363. It gave us 4 ticks profit. We moved our stop up to break even. It came and stopped us out at break even. All right, it dropped at that point. It had dropped another 1.25 through our stop, which would have been okay had we left our original risk where it was. And then it went up 1 point through our profit target. Our profit target was here at 65. We're trying to get 2 points out of it, and it went up to 66. All right, you can see it came back down, but it got really sideways in here. All right, everything started to go sideways, and we're back inside this range. So this range actually began way over here at 937. It stepped out of it just a little bit right here for about 15 minutes, right, 10:29 to 10:48, and then it got right back inside the range. So the ES is sideways and slow, and break even for us today. The Russell, unfortunately, we missed every single trade that happened in the Russell this morning, and they were all winning trades. There were only 3 of them, though. Right here on the Russell, we had bullish divergence. When I say divergence, what I mean is the green line here, primarily the green line, but the other lines too, but primarily the green line is moving away from the cycle, which is the red and blue line down here on the slingshot. So we had this divergence, and it was bullish because the slingshot was overbought. When that happens, we anticipate price is going to come here, test the BBC. The BBC is a bull-bear cross line, this green one right here. We anticipate price is going to test that and bounce off of it back in the direction of the cycle. All right, so up. It did do that this morning. I couldn't find my DOM in time to put this trade on. By the time I found my DOM, the trade was up here, so I had missed it. All right. In every one of these scenarios right here, it either didn't give us a divergence or it didn't give us the up close in the direction of the trade. This one right here, we had some bearish divergence, just a little tiny bit of it. And it tested the BBC and gave a down close right there. Okay, but that wasn't really tradable. Over here, it didn't test the BBC. Over here, it had bearish divergence when it tested the BBC, but it kept going right through it. So we didn't have anything in there. The next real opportunity was right here at the weekly trading zone. We had bullish divergence right in here. You see how the green line's going away from the cycle. Price came down, tested the BBC at the weekly trading zone, so the up close right there is a spot to enter. You could have gotten in right there, and it made a nice move up. All right. The next opportunity on the short side was over here, where we had bearish divergence. You see, the cycle now is down at the bottom. The green line was moving away from it. Price moved away from it, tested the BBC, and gave a down close for the opportunity on the short side. That was it on the Russell. We didn't have any trades over there today. Those were the few setups that we had. For what it's worth, it's a holiday in Europe today. Well, in England anyway, it's a holiday. I don't know how much of Europe is calling it a holiday, but so the markets have been a little bit sideways and slow today. We'll go to the YM now. I took 2 trades on the YM and I missed a whole bunch of them. Okay, I'll show you the ones I took right here. We started out this morning. There was some bullish divergence right in here, a little tiny bit right there. Right, we came down, tested the BBC, had the up close. That was right after the open. All right. Now I want everyone to note that we're using the same exact indicator set, the same setups, the same time frame, same everything, just across all these markets. Okay. Trying to keep it really simple for you so you can trade whatever market you're comfortable with, using whatever risk you're comfortable with. You can, if 4-tick range is too fast for you, you can double it, go to 8-tick range. Hang on, it's loading up. See that? The 8-tick range looks pretty nice too, doesn't it? Or you can go to you can go to a 500 contract if you're more comfortable with that type of a chart. 1500 contract. Whatever you want to do. In the live trading room, we have 2 hours to show you guys how things work, so we need to be able to generate trade setups. So we use smaller time frames. All right. So here we go. We had a pullback up here, a test of the BBC with a down close. I got short right there. It came down here a little ways, and I moved my stop up to break even plus a tick right in here, and it came back and stopped me out at break even plus a tick. Okay. Okay, over here we had the same thing. We had bearish divergence right here. Now on this one where we had the bearish divergence and where I entered the trade, it was still red down here, but it turned blue on me while I was in the trade. I had said when I was in the trade that I was going to just risk a little bit on this. Okay, I was only going to risk a little bit on it because I figured if it was going to go up more than 5 ticks, it was going to keep going up, and it did. If I would have risked 7 or 10, it would have stopped me out with 7 or 10. So I only risked 5 ticks on this, and it stopped me out with a 5-tick loss. All right, there was another small opportunity right over here. Here's bearish divergence, the down close after testing the BBC. On the long side, right in here, the pullback down to the BBC, test to the BBC, bullish divergence down here, you see, bullish divergence, with the up close and a move up. Over here, we're getting in toward the break period right here. All right, I had missed all these trades. We had the down close, the price moved down, we had the bearish divergence, came back up, tested the BBC, and gave us a down close right here. All right, and so this trade is just dragging on now. Over here, bullish divergence with an up close right in there. That trade's still working. The markets aren't really moving at all right now, right at this time. Pretty stagnant. But that was the YM. So I've done the YM, the ES, the Russell, gold. I didn't do gold. Here are the gold trades. Now I missed a few in gold, as I usually do, but I'll show you the gold trades. Okay. Keep in mind, everyone, that when I'm doing this, I'm trading a whole bunch of markets, and I'm trying to help people learn how to trade the markets. So I'm not getting all the trades that are available. If you were a partner, you don't have to teach people how to trade. You don't have to trade all these markets. You don't have to show them on whatever market they want to see. So you can trade just 1 or 2 markets, and you will get all these winning trades that I end up missing. Okay, or you can get all these winning trades. I can't say you will, but you can get all these winning trades that I end up missing. All right, I just want to make that point for everyone. All right, this is gold. Now, gold started off right here. We had some bearish divergence. This wasn't the optimal trade setup because the cycle was blue and headed up. All right, we had the down close after the test of the BBC right there. It went in my favor just a little bit, and then it turned around and stopped me out. All right. Over here, things get all mixed up down here. This is the one that I'm looking at right now. Okay, and I'll show you something about the other one in a little while, but right now this is the one I'm looking at. All right, now right here, price pulled back right here, and everything was still blue when I entered the trade. It tested the BBC and had an up close. I got long right there, and that one stopped me out. So I was down 2 gold trades right there. Okay, it flipped around, and I'll show you this really quick. All right, this is something from last week's partners meeting, and the reason why I just have the green and the brown on here, you're looking for the same type of divergence, but instead of diverging from the cycle, it's diverging from the brown. And instead of taking a trade when it just diverges, you would look for the thing to snap back in the same direction as the brown. Right here you see the brown is headed down. You want the green to diverge from it and then head back in the same direction as it. That will give you many quick scalps like this on this time frame. On a larger time frame, it won't be as quick of a scalp, but on this particular time frame, you know, this one right here was 1637.1 down to 1635.9. So let's say you didn't get in at 7.1. Let's say you got in at 6.9. We'll give it, you know, a couple ticks slip. You know, there's 10 ticks right in there. It's $100 a contract. Just wanted to point that out. All right. Let's see. Here's another one right over here. The same thing. And another one right here. The same thing. Now that's right there and right there in the price movement. Okay. All right. Back to the trades that I took. Here we had bullish divergence. I missed this trade. All right. I could have gotten long right in there had I not missed the trade. That would have wiped out all the other 2 losses that I had because I don't have a target on the gold. All right. I just let the gold run. I took this short trade right in here. We had some bearish divergence. I took the short trade when the MA1 started to hold price in right here like this. I moved my stop up to break even, and it got me out at break even. That was a really quick trade. It doesn't look like it was that quick, but it really was. I moved my stop up to break even, and it stopped me out at break even pretty fast. Right here we had some bullish divergence. Price was pulling back down, and over here is where the entry actually would have been. Okay, we still had the bullish divergence right here with the up close. Missed that. Here we had bullish divergence, but the cycle was headed down, so I probably would not have taken that trade, and we're in the break period now. Okay, that was gold today. Now I've done gold, the YM, the Russell, the ES. Let's take a look at the NQ. Okay, the NQ had some trades this morning, and I took one of them. Where did I trade this thing? Right over here. Okay. Well, let me just go all the way back and start at the beginning. All right, right in here. Again, guys, you see same time frame, same indicators, same trade setup, same exact thing we're looking for here. All right, we test the BBC. The price moves up off of there with the bullish divergence. Okay, in here we had bullish divergence, but we didn't have a test of the BBC. The next one was over here, and we didn't have the divergence, so there was no trade there. Okay, just moving through it all. Right here we had some nice bearish divergence, but we didn't have the pull away from the BBC and the pull back up to test it. Okay, we did right here, but it went through it a little too far, and the cycle's going up in blue, the MA1's going up in blue. So nothing in there. It turns around in here, and this right here was right at 10 o'clock. We didn't have any news events today, but this was right at 10 o'clock. Okay, we had bullish divergence right here. Price pulled back, tested the BBC, and had a nice move up. It flipped around and did the same thing on the other side. Bearish divergence. Tested the BBC with the down close and a move down. This was a follow-up trade. This one had a little more risk in it when I took it because the cycle started to move up. When I was looking at the trade, it didn't look that bad, but as soon as this bar right here closed, the red bar closed down, then it looked a little worse. I was quick with my risk on that. I actually could have gotten a little more out of the trade than I did. I shorted in here at 31, I think is where I shorted. And I could have gotten a little more out of that than I did, but I accidentally clicked the wrong button on my mouse. So I got a little bit of profit out of it. All right. Over here we had some bullish divergence, tested the BBC with an up close, and that moved up. Over here, bearish divergence, tested the BBC, and it moved down. Over here, bullish divergence, tested the BBC, and it moved up. And in here, we kind of lost the divergence, so we wouldn't have been looking there. All right. Over here, we had some nice bearish divergence. Okay. There and here. Tested the BBC and a down close. Over here, we had the test of the BBC with the down close. Okay, right there. And now we're right at one of those spots. Well, right here we had the brown was moving up right here. If I had just the brown on, and I'll do that. I'll take the other things off just so I can illustrate what I'm talking about again. You see how easy that is? The brown was moving up. The green pulled away and snapped back into the brown. So the entry would have been right in here at 26.36.5, right in that area. And it's gone up, let's just say, from 36.5 up to 41.5. 5 points. All right, that was the NQ. Now, I think I covered every market that we looked at, really. There was one more market that we looked at. This is the 10-year notes. We had bearish divergence right here with a down close on this bar, and it moved down, quite a bit from there for the notes. It was a decent move. Let's see. That's pretty much it, guys. If anybody has any questions, let me just look in here. Hold on. Jim says no. It's not an engulfment. Sound is off. Back on. Off. Back on. My sound should have been on the whole time. When I say bullish divergence, let me show you an example of it. Let me show it to you on gold. Okay, when I say bullish divergence, what I mean is, and again, let me just take off some of these other lines here so that it's not misleading. All right. When I say bullish divergence, what I'm really talking about is when the green line and the other lines, but mostly the green line, is going in an opposite direction of the cycle line. That's what I mean. Okay? As far as candlestick patterns go, sometimes you'll have an engulfment. Maybe, maybe not. But these are 4-tick range charts. So it's not likely you're ever going to have one of those, okay, on a range chart. So right here what I'm looking at is the green lines have diverged away from the cycle. So at that point you're looking for price to come back and test the BBC, which is the green line up here. Okay? Test the BBC and then move back in the direction of the cycle. The cycle is overbought, so you expect that the green line is then going to move up and meet the cycle like it did right here. Okay? That's what you anticipate happening. The reason I'm hesitant to take trades when the cycle is moving up is because at that point, instead of the green line moving down to meet the cycle might be moving up to meet the green line. Okay? The short little snaps, like this one right here, now you can see right here on the brown, it was doing the same thing. That's what I was just illustrating to you a few minutes ago. Everything is going in the same direction, and there's just a little bit of a hiccup in the momentum right here. We used to call them hiccups. There's a little hiccup in the momentum right here, and then it just turned down and kept going. Okay, that's what you're looking at with those. Okay, so the divergences are, well, like right here, it's divergent a little bit. Right here, right here, right here, right here, and right here. You see all that stuff? Hopefully that answers the question for you. Okay, and when it happens, you expect the green line to go back up and meet the cycle. All right, now price is going to go with it. That's what you anticipate. The green line to move back up and price to move with it. The green line to move up and price to move with it. If it happens that the cycle is moving towards toward you, toward the trade, that's when you start looking for an exit. All right, or just don't even enter the trade. Okay, it's not to say that those aren't going to work out. Sometimes they do. As a matter of fact, they do fairly often. But the highest probability trades is what we're interested in, and those are when everything is going in the same direction. Okay? All right. Now I'm going to stop the recording.